Good morning, everyone, and welcome to the Sirius Report. Well, Paul, it looks like both the EU and UK are so desperate for cash that they are now creating policies that focus on common individuals throwing their savings into both bonds and equities in order to keep their entire financial systems from imploding.
Yeah, absolutely. And we've been aware of this for a number of days. Arguably, it might even be a week. And I haven't seen a lot of coverage about it. I'm quite surprised because I think the statements made by, for example, the European Central Bank are very damning for a number of reasons. And I'll read this was a post, obviously, made on X, which said, there is an urgent need to channel retail savings into capital markets and to develop those markets and finance EU priorities. An EU savings standard could increase retail participation, benefiting savers, boosting investment, and supporting strategic priorities. Now, my immediate question, and there's a lot of questions, but the immediate question is, why is there an urgent need for the European Union to basically get all retail savings or a significant proportion of retail savings and put them into capital markets and to finance EU priorities? Because that implies if there's an urgency, there's a serious problem. And secondly, there's a serious problem with capital markets, which implies a number of things, including clearly liquidity issues, and also, of course, financing EU priorities. Now, what's one of the big EU priorities? They want to, the NATO countries get everyone spending 5% of their GDP on the military industrial complex, obviously to fight a war that's never going to happen because Europe and the United States and NATO will never go to war with Russia because Russia's a nuclear power and no one wants to go to nuclear war with each other because the argument is it's the end of the planet. But they desperately want to enrich the military industrial complex, uh, and therefore they have to create this fictitious bogeyman called Russia and frighten everyone enough to really believe that Russia's going to invade after Ukraine, whether you're the Baltic republics, Poland, Hungary, and eventually they'll roll up in the Netherlands and France and Germany. I mean, yes, it's all preposterous, but one thing that is clear at the moment is, as much as all this talk about these EU defence funds, and they're really struggling to finance them. I mean, they're talking about having common debt. How about countries are going, well, we're not prepared to break our debt ceiling. So clearly there's been pushback. So what they're then going to want to effectively raid in inverted commas retail savings and say, oh, I've got an idea. We can invest your money in, and you can pay for all the bombs and missiles we're going to pretend we need to fight a war we're never going to fight. And that's the implication of this. But if that would therefore suggest that capital markets in Europe in this case, because we're talking about Europe, are in serious trouble. I mean, if governments have to basically go and seek the people to bail out them and to bail them out in terms of their requirements for investment or their requirements to basically pay their bills themselves, then this is a huge problem. And as I say, I'm really surprised in some ways. A lot more people haven't seen this or talked about it because it's extremely serious. I can't recall a period in history where there is an urgent need to go, well, you, the savers, have got, well, what is it? I don't know. €1 trillion. We're just plucking figures, but it's a huge amount. And we want to take that money and then we'll give the opportunity to invest in things. Well, what are they going to want you to invest in? They're going to want you to buy government debt. It's absolutely clear. If you want to finance EU priorities, And the other thing, of course, is, we're back to this thing. This implies to me that big institutions won't buy the debt, other nations won't buy the debt. They basically ran out of options and gone, well, as a last act of desperation, let's get the people to buy the debt. So you can buy some Dutch debt or German or French or whatever. And then the problem with that is, what are they going to do to incentivize people to part with their money? And how's the mechanism going to work? I mean, we've got a situation where to go and buy sovereign debt is not simplistic and straightforward. That suddenly they're going to create all these opportunities and avenues so the average Joe can go and buy debt, presumably, and who knows what else, invest in some exotic uh, funds that do some very peculiar things but promise a big rate of return, and all your money gets blown. And is this another way, actually, of trying to utilize capital from the likes of you and I to bail out financial institutions who have reached the end of the road and don't have the capital to do anything anymore anyway? I mean, and you have to start genuinely believing that this is as bad as we've seen, and worse than we've seen since 2008. Because, as I say, when effectively they're going to go with a begging bowl to the public, in this case in Europe, saying we need your money desperately to plug holes in markets to finance our to we want you to finance government spending, and which, by the way, you already pay tax on, which that tax is supposed to be spent in an appropriate manner to fund all your priorities, and that's not enough. So not only are you fleecing us with taxation, direct and indirect, but now you have the audacity to come and demand or say we need your money to prop up our inability to finance anything, because, again, rather like the United States, they've overstretched themselves. They're not in a position to responsibly manage their budgets. So everything's spiraling out of control. So as a last resort, let's depend on you. And how much confidence would you have that investing in this, you don't end up with uh, taking a massive haircut in the future, or just not getting anything back at all, and all your money is vaporized? And I'm not exaggerating when I say that either. I think if anyone was to take this offer up, they better read the fine print very carefully and get proper financial advice from those people to ascertain what exactly it is they're investing in, and what the risks are, what the returns are, and how is your money protected based on investing in a financial system that clearly is in such a mess that they've got no one to turn to but the likes of you and I.
You know, you pointing out, you haven't seen something like this. I remember after 2008, they had the big, of course, Congress came and bailed out a number of different banks, the insurance agencies, etc. But then Speaker Nancy Pelosi had talked about creating a bill that would seize everyone's pensions, 401ks, IRAs, etc., put them in a government fund to buy treasuries, and then promise everybody a 3% return every year to protect your retirement. That was really the first time that I saw that, even potentially put out there. It crashed and burned awfully fast. But when you're coming to this point, what is the first thing that governments do? They increase taxes. Well, the reality is that in Europe, the tax rates are already probably at, a high level, especially with people unable to afford rents, unable to afford to buy homes, unable to buy many of the other things. Then you have to take into consideration the ECB. They've been lowering rates. So that means they should be able to expand their money supply to be able to fill the holes where these what's lacking in the financial system. That I think isn't working anymore. It's the equivalent of they kicked the can down the road now for 17 years and take all that money expansion because that's what's going on, even in the United States with this big, beautiful bill. It's going to expand the debt ceiling another $5 trillion. That's going to be expected to increase the national debt, the official national debt, to 40 trillion. So there's no fiscal responsibility looking at this. The US can get away with it because they've got the reserve currency, but guess what? The dollar's starting to fall. De-dollarization is taking place. The Swiss franc is now going into negative, talking about going in negative rates. The euro has gotten too high. They're trying to figure out ways to bring it down so that they can help their exports. So I think a lot of things taking place, policies made, whether it was the green policies about cutting off energy and imposing wind and solar and all this. I think we're seeing a whole mishmash of 1,000 different paper cuts now all of a sudden coming together in one fell swoop. And we started to see also from the individuals, the common person, uh, we talked about this probably a year ago that the common people in Europe were starting to buy gold themselves. Those are the proverbial savers. They're not investing in bonds. They're not investing in debt. They're not investing in the treasury markets. They see the writing on the wall that the economy is coming to a screeching halt, and so they buy gold or they save cash as a protection. They stop consumerism. Well, what happens when you take the money sorry there. What happens when you take the money from savers that is supposed to go into a consumer-based economy and give it to the government to fund the corporations? You're taking short-term fixes that just exacerbate the problem, especially in the medium and long term.
Yeah, absolutely. And it's worth noting there's clearly you can see further indications of problems in Europe because the European Union wanted to have a joint European Union deposit insurance. And Germany's Merz came out and said, that's not going to happen. There's no reason to pool functioning liability systems at the member state level within the EU. Well, yes, there is, because clearly and I'm not saying they should do it, by the way, but clearly there's a fear that one nation might go under or might have serious problems. And then, well, if we collectively pool all these systems, then not only are we getting more integration in the financial system in Europe, but therefore we can all collectively support and bail each other out. But if you look at Germany, Germany has a huge number of small cooperative and savings banks, which have their own individual systems for protecting deposits. And as they rightly said, they don't want to be on the hook for losses at lenders in other countries.
Yeah,
Absolutely.
absolutely.
So they're completely, Mertz is totally right about this. But again, this is just this collective approach, meaning, well, if there's a problem in country X, then collectively we're going to respond to resolving this problem. But this again is just another example of the fact of everything is totally unraveling. And
Yeah,
the desperation, obviously, for this joint protection. I mean, the ECB says, oh, it'll make the system stronger. No, it absolutely won't. It just creates more central points of failure. So, is it any surprise then that they've come out and gone, well, if that's not working and other things and other proposals aren't working, well, we need to get you, the people, to come in and bail us out and invest your money and plug holes in capital markets and buy our debt so we can go and make weapons we're never going to fire at anyone anyway. And how does that benefit the European economies? It doesn't at all in any way, shape, or form. So I think I'll obviously give way to you, Ken, and then I want to talk about what some aspects that are going on in the UK, which is very similar. And we know irrefutably the United Kingdom's in serious trouble, and they've got serious budgetary problems, serious incapability to finance government spending. And, the government's come out and had to completely backtrack on all this tax reform, etc. And we'll talk about some of the developments or claims that have come out of the United Kingdom, which in a very similar way to what we've seen in Europe.
Yeah, you made a great endpoint before we segue into that in regards to the question. Now, is Europe truly, do they truly believe that Russia, once they deal with Ukraine, is going to go after the rest of Europe? And so they're calling for this 5% across the board. Now, some of it's being pressured, of course, by the U.S. and the Trump administration. But it's kind of interesting because the ECB and coming out of van der Leyen's office, or I'm not the ECB, the EU coming out of van der Leyen's office came up with this. While some sources indicate that this increased spending for defense could potentially lead to cuts in social spending, there is indication, of course, that the EU is calling for a lower standard of living for Europeans in order to fund this defense buildup. And the real question is this money going to simply full bore into the military industrial complex, or is this just a facade that the money is going into the black hole that is financialization within Europe? And in the meantime, a little bit of trickle, they'll create a few more armaments and say, hey, look, we did this, we're ready to go. But in reality, it's a way to impress upon the people, look, we're under, World War III is coming, so you need to buckle up and tighten your belt and have a lower standard of living. In reality, most of that comes from the bad policies regarding immigration, monetary expansion, et cetera, et cetera. It has nothing to do with what's going on with Russia and the foreign policies that are happening. And of course, as we head into what you're going to talk about in the UK, it's so interesting that they've just now finalized dealing with how they're going to do with their welfare system and a number of other aspects that are going to affect the British people straightforward.
Yeah, absolutely. And I thought I'd leave another reason why there's serious problems, because a statement came out regarding the UK. And there was a talk about, oh, look, we have this vibrancy of capital markets, but we want to increase the diversity of that market. And going, well, the strength of UK capital markets is they attract overseas investors. But there may be an opportunity to improve the vibrancy of UK capital markets if UK retail investors could be encouraged to invest more. Well, another argument there is overseas investors are just not investing. In the United States, they're pulling money out as well. The same's happening in Europe. The same's happening in the UK. So that they're trying to say, oh, this is just in addition. It's not in addition. This is like we're having to plug a hole somewhere because of a lack of overseas investors. Oh, the UK population can do this. So we're going to encourage them to invest their savings for apparently the benefit of the wider economy. I mean, and the claim is there's in excess of 10 million people in the UK who have cash savings, and that cash could be somewhere in the order of 700 billion pounds. Okay, you can't invest all of that, so the argument is for about 400 billion pounds could be, in inverted commas, responsibly invested, whatever that means. And I haven't seen a lot of responsible investment coming out of financial institutions for a very long time. Hence why they're all in a complete mess themselves. But so yeah, they want the likes of you and I to invest in funds, etc. And therefore we can take a lot of this money and then invest it in UK capital markets. using diversified investment products, again, whatever that means. So that again, it's the same alarm bells. This is question I would ask is, why is no one else buying your debt? Why clearly is people pulling their money out and not investing in the UK or investing in Europe? Also, why is it that why don't you get private equity to invest? Why is big financial institutions not investing in your dreams? Because they're a nightmare and no one wants to touch them. So, and they actually admit by saying, in growing the UK economy, they want to encourage inexperienced retail investors to directly invest in stocks and shares without further support and guidance regarding diversification and wider financial education could be counterproductive. So what? They're going to encourage all these inexperienced people who don't know what they're investing in, and they're just going to listen to, I don't know who, and say, well, this is a great investment. You can get 5% return on this annually. I mean, and then the question is, if all this money was put in and you're going to have to pay the interest on this, and you have at a level that people will be interested in doing so, then the interest payments are going to be substantial. And bearing in mind, a lot of these investments, this government spending doesn't make any money. So they're going to have more and more money invested, rather like the US is, to pay the interest on the debt. And then, of course, when you consider what's going on with respect to wanting people like you and I to invest in this, and clearly the question is, if people don't want to invest and they just get no uptake in it, what are they going to do? Force people to invest? I'm not suggesting that will happen, but that's something that people are going to think is the case. And therefore, also the other argument is people more likely to want to take their money out of the financial system and not have it in there if they start to feel at all a sense that their money could be confiscated in some capacity. Now, that's not being said, so let's not say that because, this is going to happen. But there'll be fear in people that could happen. And you also have to really start to wonder with regards to financial institutions. Well, if there's all this money in the bank, and the argument is that financial institutions will only pay a small proportion in terms of insuring deposits, is part of the reason they want people to invest in other things is to get their money out of banks, but also to get their money out of banks because our deposits are liabilities to the bank or the financial institution. So is it also partly they want the money out of the financial institutions because those liabilities are starting to become a millstone around their neck that they're not capable of resolving the problem of which, because in the past, those liabilities, they turn them into asset. That's how it works. That's why they take the money you put in, invest in something, and then it becomes an asset, not a liability. But it's difficult to know precisely what's going on in this regard. But why is there a reluctance also in banking institutions to loan money to anything and anyone? Well, we know that's in part because they know the financial system's in serious trouble. But the implication for me is that there's all this retail money sat in banks, and someone doesn't like the idea that that money just stays in a bank. Now, that could be because, as I say, there are concerns about the institutions that hold those liabilities and what that means to them because, at the end of the day, if we look at bank balance sheets, how much are they a reality and how much are they an illusion? And how much are those banks now technically insolvent because of the fact, as we know, a lot of them are underwater with paper losses due to bond market exposure, etc., etc.
Yeah, I think one of the important things to look at is, and as I mentioned earlier, there's 1,000 different things that could be behind all this, but there have been a number of different signs on the road that show, when you get to the point that what the UK is doing, strongly suggesting what people should do with their money, that's really one step away from we're going to tell you, we're going to take your money and tell you what you're going to do with it. Okay. It's getting to that point. I think they may not have the political capital to be able to do that, similar to what the U.S. did with Dodd-Frank, where, hey, your deposits in a bank, if the banks go and do stupid things like they did in 2006, 2007, well, they can just take your money, rehypothecate it, and bail themselves out. Well, here in the U.S., I think people do not understand that those are still in the books. They haven't been needed yet, but at any given moment, that can happen. That the rehypothecation. How many people remember Cyprus about what 7, 8 years ago? But with that being said, when you take a look at the sort of rock and a hard place that the West is at. They built themselves a combination of a consumer-based economy and financialization in the financial system. Uh, you can't provide for both. You have to either feed one or you have to steal from the other. And I think, like I said, we're reaching that point where the can has been kicked down the road. It may even go back to 2001. So we could talk about the can being kicked down the road for 20 some odd years. And it's finally coming to fruition. And we're seeing this in the world. And everything that the US has been able to control, this hegemonic empire, has been other nations buying our dollars and buying our debt. That is going away. That is going away fast. And every one of those currencies is intrinsically tied to the euro, the Swiss franc, the pound, etc. So as the dollar starts to decline, all these other currencies starting to decline, all these economies starting to decline, and the banking systems are all starting to decline. And I think it's happening in a faster and more rapid pace than anybody could give credit to. And I really think that all of a sudden, desperate politicians are influencing desperate measures, and we're going to have to see how quickly this either can be resolved, the can kick down the road another couple years, or a vast implosion all at once.
Yeah. Yeah, right. I think that's for me a good point to stop.
Very good. Well, thanks as always, Paul, for the
Yes,
discussion.
likewise.
And to everybody here at the Sirius Report, thank you as always for your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.